Very good afternoon to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountants of India, I welcome you all in today's VCM on audit evidence and audit evidence specific considerations for selected items. We are going to cover two essays, Essay 500 and Essay 501 today. In order to tackle these two technical essays, we are having with us CA Vineet Jain ji as well as CA Himal Shah ji from Mumbai. We are having with us our Honorable Vice Chairman AASB CA Vishal Doshi ji, Honorable Central Council Member CA Durgesh Kumar Kambra ji, as well as the convener of Center of Audit Quality Directorate, Institute of Chartered Accountants of India. So I request Honorable Vice Chairman AASB CA Vishal Doshi ji to please start the proceedings of the VCM. Over to Vice Chairman, sir, please.
Yeah, thank you, Anil ji. Very good afternoon to all the friends. On behalf of AASB, I welcome you all to this virtual CPE meeting on audit evidence SF 500 and audit evidence specific considerations for selected items SF 501. I am fortunate to have with me CA Durgesh Kabra ji, Central Council member, and also the convener of the Center for Audit Quality, and the speaker CA Vineet Jain from Delhi and CA Himal Shah from Mumbai. Friends, we are going to, as you are aware, that the AASB has started a series of these webinars to create awareness amongst the members with respect to the importance of the various standards on audit, be it an engagement letter, be it a representation letter, be it with respect to audit documentation, materiality, the risks, and today we are going to talk about audit evidence. As we are all aware that standards on audit are mandatory for us as professionals, as practicing chartered accountants. And that is an area where we all need to really improve on our documentation. In fact, we always say that whatever is not documented is not audited. That is the principle we must all remember and also imbibe in our office with our staff also, that whatever evidence you have, whatever document you have on record, by default, that is what you have seen, that is what you have audited. And we all need to gear up to ensure that the audit evidence that we collect, because we all know that nowadays there are regulatory requirements as well as, I would say, regulatory action that is being initiated on our clients and also chartered accountants who are being the auditors of such entities where any regulatory action has been initiated, and they are being requested or asked to bring forward to the regulators the documentation or the evidence that they have when they are certifying or giving their true and fair opinion. So friends, today that is why we selected these two standards, the 500 and 501 on audit evidence and audit evidence specific consideration for selected items. We have two very eminent speakers, but before I introduce the speakers, I would request my colleague, CA Durgesh Bhai Kabra ji, to kindly give his opening remarks.
Thank you, Vishal Doshi, the Vice Chairman of the Auditing and Assurance Standard Board, the Secretary, Mr. Anil Lal, and the Speaker for today, Vineet Jain, and Himal Shah, and in absentia, Sri Sanjeev Singhal-ji, who is the Chairman of the Auditing and Assurance Standard Board. As is rightly said by Vice Chairman Vishal Doshi, that if you don't have the evidence, then the audit is not done. And for the purpose of audit, it is very important for all of us to have documentations as well as the evidence. And every stakeholder today is looking on us that we perform our duties judiciously. And when we need to perform our duties very judiciously, then the documentations, SQC, audit evidences, the whole series of 500, which start from 500, 501, 505, and up to 580 or so. So approximately nine standards are there into 500 series, and all those are very important for all of us. And we need to have such audit evidences which are relevant, and on the basis of that, we can frame the audit opinion. And we can show wherever it is needed to any stakeholders in case of any question mark that we have performed our duties very diligently and there is no there is nothing left from our side. We have taken the whole care because the expectations of all the regulators and stakeholders, I would say stakeholders expectations is different, but simultaneously all other regulators, may it be RBI, may it be Ministry of Corporate Affairs, may it be SEBI and CAG, the expectation has risen from the role of an auditor, from the watchdog to the bloodhound. Do we really need to perform as auditor of any company as a bloodhound? The opinions are different. We are a watchdog, as is said in our standards also, and we need to continue as watchdog. But what is the specialty of a dog? Whenever there is a suspicion, the dog starts barking. So what is needed today for all of us, that skill of barking has to be there. We need to bring out in the public before the stakeholders that yes, there is something suspicious, and the care has to be taken. It has to be intimated to audit committee. It has to be intimated to the stakeholders wherever needed. If the management takes care of it, then there is no problem. If they don't take care of it, we need to be very specific into this. Friends, the SA 500, which deals with the audit evidence, is going to be dealt by Vinay ji and Hemal ji. Both will be dealing with SA 500 and 501. 500 is basically with reference to sufficient, appropriate audit evidence, which is required to be collected, generated, and due care is to be taken and documented properly. And for that, what is important for all of us is that we need to have our procedure and design and performance of audit in such a procedure or in such a way that it enables us to have the sufficient and appropriate audit evidences. And this SAAE, sufficient and appropriate audit evidences, helps us to draw the reasonable conclusion for the audit opinion. Friends, we need to consider the relevance and reliability of info which are being used for the purpose of sufficient and appropriate audit evidences. This may be the management info from the management experts and from some other sources. And if we feel that these are inconsistent, there are some doubts and there are some lack of reliability, then we as an auditor, with the skill sets available with all of us, need to modify the audit procedures which we are following. And we also need to use the additional audit procedures for the purpose of having cleared the doubts and for the increased reliability. Friends, we must know that what are the SAAE, sufficient and appropriate audit evidences. And I believe that these are the audit evidences which are necessary to support audit opinion. These are of cumulative in nature, and primarily these are obtained from the audit procedures which are being performed by us while conducting the audit. And these may also include the past evidences also, or from the previous audit also. And accordingly, this can also be taken from various quality control procedures laid down by the corporate or management. So these are the things which we need to take care while we are dealing with this. And simultaneously, the other one, which is 501, I believe that that is specifically deals with inventory, litigations, and claims and segment informations and reportings dealt by the two speakers in detail. But we need to be very careful that how the inventory is to be dealt while we are conducting the audit, how the litigations and claims are required to be dealt, how the segment information and reporting is to be done. We need to understand it very well, and we need to form our opinion on the basis of the SA 501, which deals with the specific consideration for selected items. Friends, the institute has also come out with the directorate known as Center for Audit Quality, which was set up when Atul Gupta ji was the president. And let me tell you, this particular Center for Audit Quality is taking all these steps to build the skill sets of the Indian Chartered Accountants and Indian Chartered Accountant firms, that how the quality of audit can be improved. And just to begin with, we are going to have research in this. We are going to have the research paper published for the stakeholders as well as for the members of the institute. We will be organizing various quality cafe for all the members, by which they can understand how the audit quality can be improved. Because every then and now, the question is there on the audit quality that we have not done, whereas the mistakes may have taken place on the other part also. So what is required to be done as far as the audit quality is concerned, we are trying to do that. And let me tell you that we also have developed and launched the audit quality maturity model, which is first time in the world by any institute who has launched. And we feel proud that audit quality maturity model by ICAI was launched last year, was supposed to be operative from 1st of July this year, but we have proposed to defer its applicability from 1st of April 2023. And what is this model exactly? The self-evaluation technique of the firm who are conducting the audit of the various listed entities and banks and insurance companies. The branches of banks and insurance companies, if they are the auditor, is not included. So it is applicable to only those auditors who are the statutory auditors for listed company, as well as who are the statutory auditors for banks and for the insurance company. And let me tell you, friends, by this, you can evaluate your firm, that where you stand in level 1, level 2, level 3, level 4. And if you are in level 4, that is the best one. Level 1 is the nascent stage, and you have to improve upon like anything. And ultimately, where it will help all the chartered accountant firms to have the best of the quality in the audit work, and will allow all the chartered accountant firms to have the level playing field. And once it becomes mandatory, probably we will be putting all the names of the firms in level 1, level 2, level 3, level 4 category on the ICI's website, where the stakeholder comes to know that these are only not 4, 5, 6, 7, or 8 firms, but there are 50 firms in level 4 or 200 firms or 1000 firms in level 4, which is having the best quality. And there will be a lot of choice to the various stakeholders and to the corporate world to choose from these Indian firms which are there, or the chartered accountant firms which are there in India. So I believe that these kind of activity will going to definitely help all of us. With this, I must thank Vishal Doshi, Sanjeev Singhal, and as well as Anil Lalji, who is the secretary of AASB. I think they have done wonderfully well. I think Mega is the secretary, and Anil is supporting them. So I wish that by these kind of various webinars and VCMs, the skill set is developed of all the chartered accountants, and we continue to improvise our quality in the audit, documentation, evidences, and all the procedure with respect to audit, especially SQC1 also. And I'm sure once all these are being followed properly by all the chartered accountant friends who are into practice, I'm sure our profession's flag will again fly on a higher side, and we will be performing to the best of our abilities. Thank you very much.
Thank you.
Thank you very much, Durgesh bhai, for that insight into SA 500, 501, and also briefing the participants with respect to the CAQ and the importance of CAQ, and also the way forward for the CAQ. Friends, it is my privilege now to introduce the two speakers for for today. Our first speaker is Vineet Jain, who is a chartered accountant and has also done his bachelor's from the University of Delhi. He is a pragmatic consultant who strongly believes that the key to imparting supreme quality solution or services to clients is to get into detail. Vineet is active amongst the wide network of CAs in India and CPS in the US and Canada, and assists them in execution of tasks effectively in a time-bound manner. Currently, Vineet is the CEO of Hemsworth Consulting, an international professional services and global outsourcing company having offices in New Delhi, USA, and Canada. Vineet has assisted many fast-growing global organizations to establish their presence in North America. And as a part of this process, he has facilitated clients in the US and Canada to establish and develop offshore entities in India. His experiences include statutory audit of publicly listed as well as closely held companies, internal audit, financial reporting, and has also served the world's largest power and metal and mining companies in process and performance efficiency improvement in the CIS region. Vineet has widely traveled abroad and is very keen to explore untapped potentials across the globe. With this, I welcome Vineet ji to this webinar, and also I would in advance thank him for accepting our invitation to take up this session. Friends, our second speaker is CA Hemal Shah, who has 20 years of professional experience in audit, including financial reporting under Indian GAAP and IFRS. He is a partner with SRBC and Company and has an experience of more than 18 years. Over these years, he has gained extensive experience in serving Indian as well as multinational corporates across various industries. He is a regular speaker in various professional forums of accounting and auditing related topics. He is the vice chairman of the Accounting and Auditing Committee of the Chamber of Tax Consultants, the CTC, as we popularly know as. He has contributed to various articles on accounting and auditing related topics in journals for CTC, and has also co-authored the book on Comprehensive Guide on CARO 2020, co-authored with the CTC, jointly with Taxman. And he has also co-authored background material for ICAI's Executive Master Program for New Age Auditors. With this, I take the opportunity to welcome Hemal bhai also to this webinar, and I also thank him for accepting our invitation and sparing his valuable time to enlighten members on the topic. So friends, with this, I hand over the session to Vineet ji. Vineet ji, over to you.
Thank you so much, Vishalji, for such a warm introduction. And I would first like to start by thanking Auditing and Assurance Standard Board of ICAI for inviting me today. All the members, CA Sanjeev Singhal ji, Durgesh ji, Anil ji, thank you so much for having me today. And today I've been asked to provide deliberation on SA 500 audit evidence, along with my fellow speaker Himal Shah would be taking up SA 501. So I will try my level best to provide as much knowledge as I can, and I hope that this webinar turns out to be a useful one for all the users today. So friends, to start with, SA 500, just now CA Durgesh ji gave a brief insight about what exactly is inside this particular standard, and a lot of things he has touched and touch and go he did, and all of these concepts are being covered in SA 500. And this particular standard is a very, very important one. It is a broad level, it is a generic standard, because all the other standards on auditing are dependent upon this standard, SA 500, because audit evidence is inevitable from the audit. Without audit evidence, there is no audit. So each and every aspect is related to audit evidence. So this particular standard is the essence of auditing and is a very important one. And we as chartered accountants, as professionals, we need to perform at a due diligence and utmost care when we perform an audit, especially while gathering the audit evidence. Based on my professional experience, especially here in audit of companies from India or maybe from outside India, in US or Canada, I've always faced challenges in gathering audit evidence uh, after a certain extent. Whenever the client, on one hand, the client wants us to get the audit done, they want the audited financial statements in their hands as soon as possible. But on the other hand, when we ask them to provide audit evidences, so the convenient ones, they provide it immediately, but the ones which require a lot of working or a lot of calculations and all are required for those kind of audit evidence, the clients are get a little reluctant, though their intention may not be wrong, but then they just do not want to get into the hassle of that. But then we as professionals, we have to put our foot down somewhere, because with increasing regulations and compliances and all those transparency with the auditors, we need to ensure that we gather sufficient appropriate audit evidence and complete our audit file, and then ensure that the basis of our audit opinion is appropriate. We need to have sufficient backings, because otherwise we as professionals would be in the problem with all the increasing compliances. We have heard of a lot of cases in the past wherein a lot of blunders have happened without sufficient audit evidence, and going forward we do not want to get affected by that, especially as chartered accountancy community. So this is a very important standard that we will be talking about today. So Anilji, if you can just allow me, I can share my presentation
Yes.
that I have.
Yes, sir.
uh, okay. So
It is visible, sir.
is it visible now? Full screen
Yes,
mode?
sir. Fine.
Okay. Yes. So SA 500 audit evidence, I just said that this, just mentioned that audit evidence is the essence of auditing of any type of financial statements. So to start with, I would like to explain the scope of audit evidence, scope and objective. So basically, this standard on auditing covers all types of audit evidence which are required during the course of an audit, and explains what exactly is audit evidence. So whatever audit evidence we come across, whatever information we gather during the course of our audit, may it be verbal, documented, electronic form, paper form, whatever it is, SA 500 covers all types of audit evidence, and they are required to be documented in our audit files. So basically the scope of SA 500 is that we all the audit evidence that is there, that is covered within this SA. Then moving on to the objective of this SA 500. So the basic objective of the auditor is to design and perform audit procedures in such a way that the auditor is able to obtain sufficient appropriate audit evidence. And then on the basis of such audit evidence, the auditor is able to draw reasonable conclusions. And on the basis of those conclusions, the auditor may provide an auditor opinion. So basically, first, through the knowledge of audit evidence, we need to design and perform the audit procedures, designing of audit procedures, then performing them, implementing them, then through these audit procedures, gathering the sufficient appropriate audit evidence, and then after that, drawing reasonable conclusions, and finally giving the auditor's opinion. Your opinion may be right, your opinion may be a clean one, modified one, unmodified one, there may be a disclaimer, whatever it is, it needs to be backed by sufficient appropriate audit evidence. And this is what the basic objective is for this particular standard on auditing. So scope and objective we have just discussed, but before we move forward and get into the details of what exactly there is in this standard, I would like to discuss what exactly is audit evidence. I mean, I want to go back to the basics and discuss about the theoretical aspect of it. Theoretically, audit evidence is defined as any information used by the auditor in arriving at the conclusion on which the auditor's opinion is based. So any information that we come across during the course of our audit in arriving at the conclusions and forming audit opinion, all of that is audit evidence. And there are basically three types of audit evidence. Audit evidence, the types of audit evidence can be divided into three parts: internal or external, financial or non-financial, oral or documented. So the first type, internal or external. Internal audit evidence means any type of information, documents, discussions, or audit evidence, we can say, which is generated or obtained from internally from within the organization or company or from the management internally. So those type of evidences, documents are known as internal audit evidence. Whereas external audit evidences are those audit evidences which are obtained from outside the organization which is under audit. There may or may not be intervention of the management or the people who are concerned from the company side, but then the ultimate source of such an audit evidence is from the outside of that particular organization, and they are known as external audit evidence. Then the second type of audit evidence is financial or non-financial. Financial audit evidence are number impacting audit evidences. Any such information, document, or for example, ledgers, books of accounts, or backups or statements which have an number impact on the financial statements, or anything which is related to the numbers which are appearing in the financial statements. Those type of audit evidence are known as financial audit evidence. Whereas non-financial audit evidence are those audit evidence which focus more on the qualitative aspects of the financial statements, like the notes to accounts, the disclosures, secretarial records, minutes of the meetings, board resolutions, and all such information which do not have a number impact, which are not number impacting on the financial statements. But yes, the other disclosures and quality of the financial statements are dependent upon these information, and these are known as non-financial audit evidence. Then the third type of audit evidence is oral or documented. Oral audit evidence, as the name suggests, is any kind of discussions, meetings, verbal communications that we as auditors have with the management or from the people from the finance department or any other department related to the audit, or internal auditors maybe. All those discussions, verbal communications, or any kind of communication between the two parties, they need to be documented. They also form part of audit evidence. Oral audit evidence also forms part of the audit documentation that is required. So this is the third type of audit evidence. Whereas the documented audit evidence, this audit evidence is present in, which is documented maybe in paper form or electronic form or in any other digitized form that is there. All those audit evidences that we come across during the course of our audit, like ledgers, statements, books of accounts, or any other, like non-financial items like minutes of the meetings or secretarial records, all of those things, they also come under documented audit evidence. So audit evidence, basically any information used by the auditor in arriving at the conclusion on which the auditor's opinion is based. That is very important. Three types: internal or external, financial or non-financial, oral or documented. We will be further discussing about which type of audit evidence is much more reliable, which is relevant, which is sufficient, appropriate in the during this deliberation, and covering each and every aspect of this. But yes, this is a basic background about audit evidence and what basically SA 500 is giving so much emphasis to, and this is a very important one. So we need to really understand the basics of audit evidence. Moving on, I have bifurcated my today's deliberation, and particularly this essay 500 audit evidence is divided into 4 parts. The first one being sufficient appropriate audit evidence. And this is the most important and most integral part of essay 500. And this covers the major aspects which is required to be studied, particularly in this auditing standard. So sufficient appropriate audit evidence is the first part, and we will be covering the major part of our today's deliberation on this particular aspect. The second part is the information to be used as audit evidence. We will be talking about what type of information is to be used as audit evidence. Then the third one is selecting items for testing to obtain audit evidence. In this area, we will be talking about what types of items. There's a huge population size when we start our auditing, and it is practically impossible for us as auditors to check and test everything within the given timelines. So we need to apply professional judgment and select items for testing to obtain audit evidence. But what kind of items and what is the methodology behind it, we will be talking about that and briefly. Then the last but not the least is the inconsistency in or doubts over the reliability of the audit evidence. I'm sure C. Durgesh ji just touched about this inconsistency aspect also while he was giving his brief. Whenever we find any kind of inconsistency in the audit evidence, or if there is any kind of suspicion that we come across, then we do have doubts over the reliability of the audit evidence, and that needs to be documented. So we will be talking about that. So these are the 4 aspects through which we will be covering our today's deliberation, and I'll try to finish it within the given timeline. So the first one being sufficient appropriate audit evidence. So what exactly is sufficient appropriate audit evidence? I mean, it has been said that audit evidence to be collected by the auditor needs to be sufficient and appropriate. But what is sufficient and what is appropriate, and how do we define it? I mean, is there any fixed sufficiency level or appropriateness level while we are auditing the financial statements? No, this totally depends upon from entity to entity, financial statements to financial statements, and what is the sufficiency level in order to gather sufficient appropriate audit evidence, or what is the appropriateness level. And the auditor as a professional needs to apply his best judgment in assessing that aspect as well. But let us first understand what is sufficiency and what is appropriateness. Sufficiency refers to the quantity of the audit evidence, the volume of audit evidence that we collect and document during the course of our audit. That is known as the sufficiency level. Whereas appropriateness refers to the quality of the audit evidence, the kind of audit evidence, the type of audit evidence that we are covering or gathering during the course of our audit, or the quality of the audit evidence that we are covering during the course of our audit, that is known as the appropriateness of the audit evidence. And both of these aspects are very important. We need to take care about both of these aspects simultaneously, but both of them are inversely related to each other. So, and that is a good thing for us. If let's say if the appropriateness level is high in case of an audit evidence, then the sufficiency level can be low. Let me just give you an example in order to explain it to you. Like if in order to verify the bank balance appearing in the financial statements, we as auditors send external bank confirmation to the client's bank, and we ask the banker to confirm the balance as of March 31st or whatever is the date of the closing date of the audit, and then we ask them to sign it and directly send it to us. So that is the most appropriate form of verifying the bank balance, wherein we have externally sent a confirmation to some external party independent of the company's management, and we have asked them to verify that amount. And once we get that bank balance confirmation directly from the banker, then we need not gather any more audit evidence, and we get comfort over the bank balance which is appearing in the financial statements, provided the bank balance is same as that appearing in the bank statements. But and then and there our audit procedure is closed. We have sufficient documentation for that. But on the other hand, if the situation is we are not able to arrange external bank confirmation, and the client provides us with the photocopies of the bank statement, then that may not be the appropriate audit evidence for us. Then we may need to perform additional audit procedures in order to gather sufficient appropriate audit evidence. So that particular photocopy of the bank statement will not help us achieve that sufficiency level also and appropriateness level also. And then we will have to perform certain additional audit procedures. Like then we may need to ask them to provide us with a written representation signed by the management claiming that the photocopy of the bank statement that has been provided is correct. Then we may also have to verify all those bank transactions appearing in the bank with our cash book, bank book appearing in the financial statements. So all of those things, we will have to perform those additional procedures just because the appropriateness level of the very initial audit evidence provided to us was not up to the mark. So this way, sufficiency and appropriateness are inversely related to each other. Higher the appropriateness, lower sufficiency required. Lower the appropriateness, higher sufficiency is required. So this is basically what sufficient appropriate audit evidence means. Now moving on, there are various factors which affect sufficiency and appropriateness of audit evidence. And we need to take care about each of these factors while gathering audit evidence. See, whenever we are gathering any kind of audit evidence, we need to, if we are sure that, okay, the audit evidence is sufficient and it is appropriate, then we have a reasonable basis for forming an opinion. But what if we do not have sufficient and appropriate audit evidence? So there are various factors which are involved behind this sufficiency and appropriateness. I will be using these two words again and again because this is what the essence is of this particular essay. So the very first one being risk of material misstatement. So risk of material misstatement, particularly how the risk is calculated and all of those things are covered in the different essay 315, and there are different essays that specifically talk about how to assess the risk of material misstatement. But the risk of material misstatement is usually assessed at the planning stage of an audit. And when we know that the risk is high, or for a particular financial item, the risk is medium or low, whatever it is, accordingly, we will have to gather sufficiency and sufficient appropriate audit evidence. They both are directly related to each other. Higher the risk, higher sufficient and appropriate audit evidence is required. Lower the risk or moderate risk, then accordingly we can lower the sufficiency level or appropriateness level of the audit evidence. So risk of material misstatement, which we assess during the planning stage of an audit, is an important part and helps us to assess what sufficiency and appropriateness level of audit evidence is required, and they both are directly related to each other. Then the second factor affecting sufficiency and appropriateness of audit evidence is materiality of the financial item. So materiality again is very important. It is calculated during the planning stage of an audit, and based on the materiality, we decide the scope of our audit, what transactions are required to be covered, what is required not to be covered, and all of those things. And especially with the material items which are above materiality level, we definitely need to gather a lot of audit evidences and try to get comfort in the best possible manner. And this materiality definitely affects the sufficiency and appropriateness of audit evidence. So higher the materiality, higher the sufficiency and appropriateness of audit evidence. Lower the materiality, lower would be sufficiency and appropriateness of audit evidence. They both are also directly related to each other. Then the third aspect is experience gained during the previous audits. So now there might be possibility that we as auditors are auditing a client for multiple years. And based on our past experience, we know what are the critical areas where there is high risk, or where areas which have low materiality levels. And we definitely have a predefined understanding about that particular organization. And that definitely helps us in gathering audit evidence. So if we have more experience, definitely we can, use our past data, and the audit evidence sufficiency level can be comparatively low when we have more experience towards that. So we can say that this particular aspect is inversely related with this sufficiency and appropriateness level. So if we have more experience with a particular client, then the sufficiency and appropriateness of audit evidence may or may not be low. This is a very, controversial thing, but yes, this experience does provide a lot of support. Then is the type of information available. Type of information available is also affects the sufficiency and appropriateness level. Like if the information may be oral or documented, just like we discussed the type of audit evidence. It may be documented or oral, or it may be internal or external. Like documented audit evidence would always be much more reliable and appropriate as compared to oral audit evidence, because a document would be written somewhere, whereas external would be much more reliable as compared to the internal one, internal audit evidence, because there would not no intervention of the management would be involved in case of external audit evidence. So that would be a much more appropriate. So the type of information available is also one of the factors which affect the sufficiency and appropriateness level of audit evidence. Then the fifth aspect is the result of audit procedures performed. We perform a lot of audit procedures, and based on those audit procedures, we decide whether we need to dig in more into the books and see what is required to get comfort over the numbers, or based on the other audit procedures, we may also think about, okay, we have sufficient comfort and we can do it. So the results of audit procedure performed is also one of the factors for affecting sufficient and appropriateness of audit procedures. Then the sixth aspect is the trends indicated by the accounting ratios. So trends indicated by during the course of our audit, we calculate a lot of accounting ratios. We perform a lot of substantive analytical procedures. These analytical procedures, calculation of accounting ratios is one of the aspects of analytical procedures. And these procedures help us to a great extent in gathering sufficient appropriate audit evidence. Let's say, for example, we are auditing a particular entity, and we calculate the common size ratio or gross profit ratio of a particular financial year under audit, and we compare it with the preceding year, and there was substantial difference between the two ratios. Then definitely we will start looking into if the expenses are on the higher side as compared in proportion to the sales as compared to the preceding year, then we would start looking into those discrepancies and try to identify those particular expenses who were substantially high as compared to the previous year. We'll try to analyze the variances. So that's how trends which are indicated by the accounting ratios help us to identify the discrepancies and variances, and then eventually we can collect sufficient and appropriate audit evidences, particularly pertaining to those areas, and then document it in our audit file. Then last but not the least, existence and effectiveness of internal control system. Nowadays, all the big organizations, yes, and all the small and medium size organizations also have some kind of an internal control system in place. And if that internal control system is in existence and it is effective and it is strong, then we can comfortably get sufficient appropriate audit evidence. And this is directly related to the sufficiency and appropriateness level. Stronger the internal control system, this is inversely related to sufficiency and appropriateness level. Stronger the internal control system, lower would be the sufficiency and appropriateness level. And weak internal control system, then we would be needing large volume of sufficient audit evidence and better appropriateness of audit evidence. So these are particularly the factors which are affecting the sufficiency and appropriateness of audit evidence. We just discussed about what exactly is sufficient appropriate audit evidence is, and now we just talked about factors affecting the sufficiency and appropriateness of audit evidence. And this is basically to understand, how the audit evidence is influenced from time to time or under each aspects when we are covering different audits. And so it is very important to understand all these factors. Then moving on, in order to gather audit evidence, there are various audit procedures performed. We perform these audit procedures for obtaining the audit evidence. Although all these audit procedures are discussed in different standards in detail, but as I just mentioned during the start of this deliberation, that this standard is on a very broad level, and other standards are dependent upon this particular standard, because audit evidence is the essence of auditing. Without audit evidence, there is no audit. So we would be just briefly talking about these audit procedures which are required to be performed in order to obtain audit evidence. So the audit procedures can be bifurcated into two parts. Risk assessment procedures, we can also call them RAP. And the second one is further audit procedure, FAP. I call it FAP. And these are also known as responses to assessed risk. Risk assessment procedures are covered under SA 315, whereas FAP is covered under SA 330. Risk assessment procedures are those procedures which are basically required to identify and assess the risk of material misstatement. This is involved at the planning stage of the audit, wherein we need to understand the entity and its environment and try to identify and assess the risk of material misstatement. So there are various procedures behind it which are required to be performed that are discussed in SA 315. Whereas in further audit procedures, it is divided into two parts: test of controls or compliance procedures, and the second one is substantive procedures. Test of controls or compliance procedures are basically those procedures which are used to evaluate the existence, effectiveness, and continuity of the internal controls. Whatever internal controls are in place, test of controls help us to identify their existence, their effectiveness, and their continuity. Whereas substantive procedures, these are those procedures which are required to, which are performed to examine the accuracy, validity, and completeness of accounting data. These procedures are more number impacting. These are related to the numbers which are appearing in the financial statements. All the work, all the backups, all the audit evidence which is required to be gathered, particularly pertaining to the numbers of these substantive numbers on the financial statements, we need to perform the substantive procedures. So these substantive procedures are very important, and these are further divided into test of details. So I'll just go back once again. I'll just show you that audit procedures, they were divided into risk assessment procedures and further audit procedures. Risk assessment procedures is procedure performed to identify and assess the risk of material misstatement, whereas further audit procedures are of two types: test of controls and substantive procedures. So right now in this second slide of we're talking about substantive procedures. Substantive procedures are further divided into test of details and substantive analytical procedures. This is the most extensive form of procedures which is performed in the audit, although now the test of controls has also have been a very elaborate one with the coming up of IFC, but then substantive procedures are number impacting. So these are very extensive. So the first one is test of details, wherein we check the transactions which have occurred during the year. And on the second part, we identify the balances that exist at the end of the year. So for the transactions, this is basically verification or vouching of the numbers which are appearing in the financial statements. Whereas in case of the balances, we verify the assets and liabilities that are appearing in the balance sheet. So in this way, the test of details is divided. And now coming to substantive analytical procedures, these are those procedures which involve consideration of comparisons and relationships. How do we do comparisons? Through trend analysis. And how do we consider the relationships? Through ratio analysis. So all of these procedures are required to be performed. They have been discussed in their individual essays in detail. I mean, I'm just discussing it on a very broad level, that these type of procedures are required to be performed in order to gather sufficient appropriate audit evidence. So once we perform these audit procedures, we start gathering audit evidence, and then on the basis of that audit evidence, when we have attained that sufficiency and appropriateness level, we draw a lot of conclusions, and based on those conclusions, we form an audit opinion. So I'd just like to give you an example related to test of details and substantive analytical procedure. Let's say if there is a company which we are auditing for the past 3 years, that was incorporated 3 years ago, and we have been auditing that company since past 3 years. And in the current year, we check the share capital of the company, which is same as that of the previous year. I mean, there has been no rights issue, buyback, redemption, or fresh issue of capital during the year. Nothing has been happened, and it is same as that of the previous year. So what we will do is we will just compare the share capital amount for the current year under audit with the preceding year, and through that comparison we will get the comfort, okay, that the share capital amount is the same, there has been no redemption, no buyback, no fresh issue, no rights issue, whatever, and the number is the same, and through comparison we have attained that sufficient and appropriate audit evidence, and we are done with that. But just in case during the year under audit there was some rights issue or some new additional capital was introduced during the year, then we will have to uh, go dig into those transactions, see the minutes book, the resolutions passed, the authorizations, the bank receipts, and then see whatever the bank receipts are reflecting in the bank statements, and see, okay, now there was some additional capital was introduced and the money has come into the bank accounts, and we have verified those transactions. And through that, we need to, that is called test of details, when we are identifying and verifying transactions during the year. In case of the share capital, if the company was incorporated 3 years ago, when you sufficient appropriate audit evidence was obtained through comparison, you need not go back 3 years ago and check, okay, first there was a share capital was introduced, prospectus was introduced, and all of those things, wherein bank receipts you're testing. We need not go back 3 years. With mere comparison of the current year under audit with the previous year was done, and that's it. We were able to get sufficient appropriate audit evidence. But when there was some rights issue or additional capital was introduced during the year, so we did test the transactions which took place during the year. So that's how we attain sufficient appropriate audit evidence during the different circumstances. So this was about the audit procedures briefly, which are required to be performed while gathering sufficient and appropriate audit evidence. But apart from that, apart from the procedures are a big part, but the part of the procedures, there are a lot of techniques which are involved to obtain audit evidence. These techniques are part of audit procedures in itself. So all of those audit procedures are dependent upon these kind of techniques. So when we talk about these techniques, there are 7 different types of techniques through which we obtain audit evidence. So the first one being inquiry. So all of these techniques are basically methods wherein the audit procedures are performed and the audit evidence is obtained. So when we talk about inquiry, this is one of the technique wherein we just discussed this before also, in oral form of audit evidence, wherein we are holding discussions with the management or having verbal communications with those charged with the governance, or holding meetings with internal controls or other stakeholders and trying to gathering all those information. All of this interaction is known as inquiry. And this inquiry is also required to be documented. Now, how are we supposed to document such oral communications or verbal communications between the two parties or discussions? Then as an auditor, we are supposed to prepare the minutes of all the meetings or discussions that have been held and document it on a paper, on an audit file. And then we as auditor also sign it and get it signed by the client as well, so that we have sufficient appropriate audit evidence that is duly documented within our audit file, that we did so and so inquiries in order to get comfort over a particular aspect, and that has been documented based on the discussions. So this is what is known as inquiry. The second technique to obtain audit evidence is inspection. Inspection is just going through the books of accounts, the records, the documents, whether in paper form or in electronic form. That going through all of that, the process of going through all of those records is known as inspection. So in this, documented audit evidence is involved, wherein we can see the audit evidence, it is in front of our eyes, and we are inspecting it, going through it, and then documenting it in our audit file and gathering the audit evidence. And on the basis of such audit evidence, we are forming conclusions. Then the third technique to obtain audit evidence is observation. Observation is something in which we as auditors do not have to do anything. We just have to observe. We have to see. We are watchdogs. We need to see what is happening. So in this case, the client performs the audit procedure. The client is performing a particular thing, and we are observing the client. We are observing the person who's getting the audit done and how that thing is going on, and then drawing our conclusions. For example, physical verification of inventory, in which the physical counting of the stock is done by the client. It's not done by us. We are just observing the client, and then we are forming our observations. So that's how that is what is known as observation as a technique to obtain audit evidence. The fourth aspect is external confirmation. External confirmation is a very reliable one. We just discussed about an example wherein we talked about how we got the balance confirmation from the bank. So any audit evidence which is obtained from outside the organization under audit, which is independent of the management, from some third party, that is known as external confirmation. Example, bank balance confirmation, debtor confirmation, accounts payable confirmation, legal confirmation. These are all, and this is a very reliable form of audit evidence because there is no intervention of the management involved. It is all provided by the third party who is not related to the company to whom we are auditing. So external confirmation is another technique to obtain audit evidence. Then the fifth one is analytical procedures. We just talked about the common size ratio analysis or gross profit analysis while talking about substantive analytical procedures. So this is the same thing. Performing analytical procedures provides us about the insights about the movement in the numbers, where the company was in the preceding years and where the company is standing during the period under audit. And maybe we can perform analytical procedures by comparisons or through benchmarking with different companies within the same industry and try to analyze, okay, if the numbers of a particular company in the similar industry is flowing in a particular manner, whether the company under audit is also, is at the same pattern or not. So all of these analytical procedures gives us insights about the flow of the numbers within the financial statements. These are majorly number impacting, and this is one of the very effective techniques to obtain audit evidence. Now, if we, I've been talking about all these are 5 of the techniques which I just talked about. There might be instances wherein we may need to apply more than one technique in order to gather a particular audit evidence for a particular item during the audit. So it is not necessary that one particular technique will only be applied to gather audit evidence for a particular aspect. More than one techniques may also be applied. For example, let's say we were to get comfort over debtors, we floated debtor confirmation to some outside party, and the debtor confirmation that we got, that was different from what is from the balance that is appearing in the books of account. Then, so floating of debtor confirmation is an external confirmation, but then when the difference came in, we then scrutinized the ledgers and we started inspection, wherein we try to identify why this difference is there and which is the party. And through inspection, we came to know, okay, there is a difference between the books as per books and as per the external confirmation. Then we went to the management or the concerned officials of the company and we talked about such differences. And we inquired about why such differences are rising. Here, the inquiry aspect gets involved in gathering the audit evidence. Now, at each stage that we are doing floating of external confirmation, comparison of the difference, that is inspection, and then going to the management for inquiry, all of these are different techniques that we are applying to get comfort over debtors. Later on, based on the inquiry, we came to know that okay, the balance as per books, the balance to this debtor is particular. Management responded that the balance as per books is higher because it includes interest because the debtor was overdue for more than 3 months. So that way, and we did not consider that interest aspect. So that way, we get to know about different aspects during the course of an audit while taking a comfort, and more than one technique is involved. Now, moving on to reperformance, I'm just talking in continuation to my example on this debtor confirmation. In reperformance, we ourselves perform a particular audit procedure. Just now in this example, the management responded that the difference between the debtor confirmation and debtor balance as per books is because the confirmation includes the base balance, whereas since the debtor has been overdue for more than 3 months, it includes in our closing balance, it includes interest also, because the interest was due if the debtor is outstanding for more than 3 months. So then I came to know, okay, if the company calculates interest on debtors, if they are overdue for more than 3 months, then I can reperform this particular procedure and check whether the interest calculation is effective or not. So in order to get comfort over this particular aspect, what I did is I posted a dummy entry on 3 months back date, more than 3 months. And then I checked the books of accounts whether the software is calculating the interest as of today or not. And if the interest is there, then the observation is correct. The interest calculation is being done, and the the internal control system is in place. So that's how I can reperform this and check whether the interest calculation, as just mentioned by the management through inquiry, is correct or not. And later on, when I have a comfort over this debtor balance, I can delete this dummy entry and document it accordingly in my audit file that yes, I performed a reperformance procedure, and on the basis of it, I found out this that the interest calculation is being done when the debtors are overdue for more than 3 months, and the interest is being calculated correctly. And the third, and last but not the least, the third technique is recalculation, wherein, like I just talked about recalculation of the interest. If the software is calculating any interest, I can also, based on the rate of interest decided, I can verify that interest amount by recalculating the interest by applying the rate of interest on the base balance of the debtors. Or for, like, let's say for calculation of depreciation, we use such a technique wherein we apply the rate of depreciation and the useful life on the written down or gross block of the assets and calculate depreciations. So recalculation is another technique wherein we can perform those calculations and gather audit evidence and verify the correctness of the numbers appearing in the financial statements. So friends, this is about the techniques which is required to obtain sufficient appropriate audit evidence. We talked about what is sufficient appropriate audit evidence, then various factors affecting the sufficiency and appropriateness level. Then we talked about the audit procedures which are required to be performed to audit evidence. This we talked about on a broad level, but yet there are different essays which talk about the specifics of these audit procedures. And then we discussed about techniques to obtain audit evidence. These techniques are part of audit procedures, which we discussed in the previous slides. So this is majorly about the sufficient appropriate audit evidence. And this is the major part of SA 500 and is the main integral part of SA 500 audit evidence. And once we have sufficient appropriate audit evidence in hand, we as auditors will be able to draw reasonable conclusions, and on the basis of that we can provide audit opinions. Now moving on to the second aspect of SA 500, we will talk about information to be used as audit evidence. So whenever we are obtaining information, we are performing any kind of audit procedures and obtaining the information which is to be used as audit evidence, we need to consider the relevance and reliability of the information to be used as audit evidence. Now, these are two aspects of the information which is to be used as audit evidence. First one is relevance. The second one is reliability. First, let us talk about relevance. What does relevance mean? Relevance basically, theoretically, it deals with the logical connection with the purpose of the audit procedure and where appropriate the assertion under consideration. Now, what does this mean? Relevance basically, we need to see that whatever audit procedure we are performing in order to gather a particular audit evidence or in order to cover a particular assertion, whether that audit procedure is relevant or not, we need to assess that. And if that particular audit procedure is relevant in gathering that audit evidence, then we are in the right direction. For example, let's say, I'll take an example of accounts payable, wherein we have a certain observation that the accounts payable are overstated. Then we will check that the accounts payable, if they are overstated, we will we will float the accounts payable confirmations. We will scrutinize the accounts payable ledgers and try to test that whether the accounts payable are actually overstated or not. But what if the accounts payable are understated? If we float accounts payable confirmation or scrutinize the accounts payable records, then we may not be able to identify whether the accounts payable are understated or not. For that, we may need to perform an audit procedure, which is known as search for unrecorded liabilities, wherein we will check the subsequent payments which are being made to the vendors, and we will compare it with the unpaid invoices which are outstanding towards the end of the year. And we will also check the date of those invoices towards the end, whether those pertain to the year under audit or not. And on the basis of that, we will try to identify whether accounts payable are understated or not. Had we applied the procedure of ledger, accounts payable ledger scrutiny, or accounts floating of accounts payable confirmation, we would have not been able to conclude the understatement in the accounts payable. But then the comparison of the subsequent payments to the vendors along with the unpaid invoices towards the end of the period under audit or year under audit, we will be able to assess whether the accounts payable are understated or not. So we need to see that we apply relevant audit procedures in order to cover the assertion of understatement or overstatement in accounts payable for this particular example. So relevance is a very important aspect. So that is why the relevance is connection between the audit procedure and the assertion under consideration. And the relevance of the information to be used as audit evidence may be affected by the direction of testing. So this is what basically relevance means. Then the second aspect of the information to be used as audit evidence is reliability. So in order to be reliable information, we need to first see that the audit evidence is influenced by its source and its nature. So the reliability factor further depends upon the source of reliability and the nature of reliability of the information. So, for example, like the audit evidence obtained from some independent external sources is more reliable than internal evidence. Or if the, however, internal audit evidence may be more reliable in certain cases if the strong internal control exists. But yes, as a general perception, independent external sources are much more reliable than the internal evidence. The second aspect can be that the audit evidence in any documented form may be more reliable than the audit evidence which is obtained orally. So any documented form of audit evidence is much more reliable than the oral audit evidence, or audit evidence in the form of any kind of original documents, or is much more reliable than the audit evidence in the form of photocopies or fax or digitized form or any other form. So this way, the audit evidence reliability is affected by the source or nature of the information which is being used as audit evidence. But not always. There are certain exceptions to the reliability factor also. Whenever we talk about, we just discussed about that the independent external sources are much more reliable. Many times what happens is the company uses an expert, we call it management's expert, and when we gather information from that independent external source who may be a management expert, that information not at all times may not be reliable. This may be some kind of an exception to the reliability factor of the external sources. But then we need to see the competence and capability of that particular expert through which we are gathering audit evidence. So even when the information to be used as audit evidence is obtained from an independent external source, circumstances may exist that could affect its reliability. So in order to mitigate such a risk, we as auditors need to gather information regarding the competence, capability, and objectivity of the management expert. And there are various ways of doing that. Some of them being like, as an auditor, we may have a personal experience with the expert. On the basis of that, we may see, okay, we may know the competence and capability of that management expert, or we may hold discussions or with that expert or someone else who may be familiar with that expert's work, or we may get knowledge about the expert's qualification or forms of other external recognition. So these are some of the ways wherein we can get comfort over the external sources, the competence and capabilities of the external sources, and gather information which can be used as audit evidence. So relevance and reliability, these are the two major factors which affect the information to be used as audit evidence. And we need to ensure that whenever the information reliability is high, we need to ensure that the source and the nature of that information is a much more reliable one, while considering it as sufficient appropriate audit evidence. So this was basically about the second aspect of SA 500, information to be used as audit evidence. Now we are moving towards the third aspect of SA 500, selecting items for testing to obtain audit evidence. So during the course of our audit, we always come across a huge volume. We may come across huge volume of transactions for testing, or the books of accounts have a lot of backups, and it is practically impossible to test everything or to cover everything or to check everything. And in order to get comfort over those numbers and get a sufficient appropriate audit evidence, we need to apply certain techniques for selecting items for testing to obtain audit evidence. And there are three methods for selecting items for testing. The first one being audit sampling. The second one is selecting all items, where we select all the items and test everything. The third being selecting any kind of specific items. So the first one, audit sampling, it is the most common and effective way of selecting items for testing in order to obtain audit evidence for the entire population. Though it is discussed in detail in SA 530 and how this audit sampling is done, but I would just like to touch upon that it is one of the most effective ways wherein the sample which has been selected out of the entire population, that particular sample is represent the entire population. So that is why this effectiveness of this particular methodology of selecting items is very high. So audit sampling is one of the most common ways. Then the second method is selecting all items. Now, testing the entire population may not be practically possible, especially when we are talking about test of controls. 100% testing may not be always possible. In test of details, we may be able to do 100% testing. But select when we decide as an auditor, when we decide to select all items, this kind of a situation may be only possible when the population consists of small number of large value items, that there are high value items appearing in the financial statements, but the volume of those items is very small. Or if there is any, the auditor is of the opinion that huge significant risk is in existence, and there is no other way than selecting all the items for obtaining sufficient appropriate audit evidence, then in that situation the auditor may select all the items and obtain sufficient appropriate audit evidence. The third approach may be the nature of, if the nature of transactions is repetitive, or there is some kind of an information system involved wherein there is no human intervention, that may make it 100% testing possible. But this is not a very common way of obtaining audit evidence, because 100% testing is not always possible. The third technique for selecting items for testing to obtain audit evidence is selecting specific items. And there might be situations where the auditor may decide that, okay, we might select a specific items based on their understanding of the organization or on the entity, or based on the assessment of the risk of material misstatements. The auditor may, or based on the nature or characteristics of the population, the auditor may decide a specific set of information to obtain as audit evidence. And these may include like high value items, like some items which are very high as compared to the materiality, or their number impacting is huge, or items based on their nature, like if the auditor has certain doubts over certain information, or the auditor has suspicion over something, then he may select those items for testing. Or the auditor may select certain items which are above a certain amount, maybe like in case of floating of data confirmation, like we float data confirmation top 10 debtors or something like that, without doing any kind of sampling. So that can be one of the situations. Or certain items which provide a different kind of information based on what understanding we have about the entity. There may be certain items which may provide some other information about the organization. We may select all those kind of items, but this is not a very effective way, because selecting specific items does not warrant the audit evidence for the remainder of the population. So the results of audit procedures applied to items selected in this manner cannot be projected to the entire population, and therefore selective testing does not provide audit evidence for the remainder population. So it will only be for the population which has been selected, and that audit evidence will cannot vouch for the items which have not been selected or have been left out. So that is why audits, out of these three techniques, audit sampling is the most effective one, because this is the population size represents the selected population size represents the entire population. And just we were just talking about it in the initially also, that we auditors are watchdogs and not bloodhounds. So we need to apply those techniques wherein through reasonable judgment based testing we are able to get maximum comfort over the numbers, and then provide our opinion, true and fair view of the financial statements. So this was about the third aspect of today's deliberation, which is selecting items for testing to obtain audit evidence. Now we are quickly moving towards the last aspect of SA 500, which is inconsistency in or doubts over reliability of audit evidence. So there, while gathering audit evidence as an auditor, we may encounter situations where we may gather audit evidence we may gather audit evidence for a particular aspect from one source, and we may gather audit evidence for that same aspect from a different source, and both of these audit evidence are inconsistent with each other. So when such kind of an inconsistency arises, it raises doubts over the reliability of the audit evidence. Like for example, when we hold inquiries with the management, based on those responses, the internal auditor's responses or any other documentation provided by the client is inconsistent. So that may raise doubts over the reliability of the audit evidence. So in that case, we need to figure out how we need to document such kind of inconsistencies and draw reasonable conclusions, and on the basis of that we form our audit opinion. SA 230 particularly talks about such kind of documentation about such inconsistencies, wherein if there is any such observation by us as auditors, then we need to document it accordingly, see what is the impact of such inconsistency, and accordingly modify the opinion or provide a disclaimer or howsoever we need to take it forward. So this was majorly about SA 500, where we covered about these four concepts of sufficient, appropriate, audit evidence, wherein we talked about sufficiency and appropriateness, what is sufficient, what is appropriate. So both of them are inversely related with each other. The second aspect is information to be used as audit evidence, wherein we talked about relevance and reliability of the information. That means information, the audit procedures should be relevant based towards the assertions, and the information that we obtain as audit evidence should be reliable. Then the third aspect is selecting items for testing to obtain audit evidence, wherein we talked about three ways of selecting items: audit sampling, selecting all items, and selected specific items, in which we discussed about that audit sampling is the most common and effective way of selecting items for testing to obtain audit evidence. And last but not the least, we talked about inconsistency in or doubts over the reliability of the audit evidence, wherein if you observe any kind of inconsistency in audit evidence, maybe from different sources, then there may be doubts in our heads as auditors, and then accordingly we need to document that kind of inconsistency and form an audit opinion accordingly. So this was about SA 500 on a broad level, and that is all from my side in today's deliberation. And I hope this discussion on SA 500 was a useful one, and I was able to explain all the points in an effective way. And
Thank you so much, Vinitji.
Thank you
so much, Vinitji. Can you hear me?
Yes. Thank you, Anilji. Welcome.
It was wonderful deliberation. Hemal sir has already joined with us
Yes.
to tackle the further proceedings of SA 501. Hemalji, can you see us?
Yes.
Hemalji?
Can you?
नहीं, आप नहीं दिख पा रहे sir. Now it is fine. Now it is fine. Vinitji, if you permit, can we start with the proceedings of SA 501 and take the combined questions at 5 p.m.?
Yes, that would be better.
Jointly we will take, because questions will be the same for audit evidence, and we will
Right.
take questions jointly from you as well as energy at 5 p.m.
Done. We can do it that
Fine,
way.
sir. Fine,
Yeah,
sir.
fine.
So once again, on behalf of AASP of ICI Energy, I welcome you on this VCM organized by AASP. Viniji has already has taken the SA 500 regarding the audit evidence and enlighten us all about the audit evidences. Now, may I request Hemalji to please start the proceedings further and deliberate on SA 501 audit evidence specific considerations for selected items. Over to Hemalji, please.
Yeah, thank you, Anilji. Thank you, Vinit. I think it was really nice to hear you also on audit evidence. As Vinit said, the audit evidence is very critical for each auditor, whether it is a small firm or a big firm, whether it is a sole proprietor or a big four or a medium-sized firm. Because, as Kavraj also said, if work is done, but if it is not documented, then it is not done, and that's the hard fact.
Yes.
So, of all the auditing standard, I think each and every standard is critical and each and every standard is important. But I think the focus on audit evidence in the current scenario is really hard, and the regulators as well as all the external investigator, if they don't find evidence, then definitely the audit profession would be at risk. Similarly, the entire fraternity would be at risk. So definitely, this requires almost utmost importance for each and every professional. Now, Vineet has covered audit evidence in detail, and I'll cover the audit evidence for special consideration. What was the need for issuing separately 501? So audit evidence is already covered in detail under auditing standard 500, but still there was a need felt that there are few factors which requires special attention from the auditor side because those are critical. And one of this is inventory. Inventory always in most of the companies have a large significant value, and generally most of the times we have seen the frauds do happen in this area where inventory are value is under recorded or value is over recorded to achieve the objective. So that is one. Second thing, in last couple of years the businesses have become complex. The accounting standards have become complex, and there are multiple acts which have been introduced in past couple of years, whether it is Competition Commission Act or the IBC, which leads to at times a dispute between the company and the regulator. Now, litigation is definitely a significant another part where the regulator as well as the institute felt that something needs to be done as a guidance to the members, and hence that was the second area which was introduced as part of this particular auditing standard. And the last one, which was critical, was segment reporting. Now, what happens is most of the time, financial numbers are given in the financial statement, but what is the true result of the company if the company is a multi-segment company? That would be visible only if the investor look for segment information in detail. And generally, company also try to manipulate those if the performance of particular segment is not good. So there was again a need felt that on segment information also there has to be some guidance given to the members, and hence this three areas are covered under 501. So let me share my screen and I'll run you through the SA 501.
So it's fine, sir. It's working. Press 5. Yes, it's fine, sir. You're not audible, sir. Sir, you are on mute. You're on mute, sir. Hemal, sir, you are on mute. You are on mute, sir. Video. Sir, you are on mute.
Hello.
Yes, sir. Now it is fine. It was not audible.
Oh, sorry. I think some problem. 1 minute.
Kindly share your screen now.
Yeah. Is it visible now?
It's yes, it's visible now, sir. Fine.
Perfect. Perfect. So SA 501 audit evidence, specific consideration for selected item. What we are going to cover now is scope, effective date. It is effective from last 10 years. It was introduced in 2010. Finally, what was the objective? What is the requirement? And finally, the application. Now, as we discussed, the scope is basically to highlight the 3 specific items which are quite critical for audit fraternity. And the effective date is April 1, 2010. So last 10 years it has been introduced. The whole idea of this auditing standard is to guide the professionals, especially the audit firms and auditors, on different aspects, whether it is related to inventory, on the existence and conditions of inventory, what auditors should do to do physical verification, and what procedures an auditor should follow for inventory verification. Second is completeness of litigation and claim. How does the company provide the information? In what way? In what manner the auditor should ask for the information? How auditor should ensure completeness of litigation and claim? And finally, the presentation and disclosure of segment information. So these are the 3 critical aspects which are covered under this specific auditing standards. So first, let's talk about physical inventory. What is required in physical inventory? So first of all, generally the question arises, is it mandatory for auditor to attend the physical count of inventory? Now, inventory, as I said, in most of the companies, it will be very critical. In fact, in many times, it is generally the biggest number in the balance sheet, or probably after fixed assets, it would be the second biggest definitely item in the balance sheet. So, getting comfort on physical count or on the inventory physical count is very critical. Auditing standard says it is critical for auditor to attend the physical count. However, if it is not practicable because of the reasons, because it is not auditor is not able to reach, or the physical verification poses a challenge, or on the safety or security of the auditor, only on those very remote circumstances auditor can excuse himself. But otherwise, in all the circumstances, it is compulsory for the auditor to be part of the physical count program. Now, why it is so critical? Again, there are multiple things auditor can actually review to do while doing physical verification. So one is definitely the entire comfort on the inventory, whether this physically exists or not. So that is the big and basic comfort which auditor gets. But apart from that, by seeing the physical inventory, auditor can also detect if there are any non-moving item, or if the items are damaged, or if these are not in good condition, if something is expired. Generally in pharma or FMCG, the expiry dates are also given on the inventory. Now, if the inventory is lying, which is expired, auditor can definitely get this information very easily while doing physical verification. So auditor gets a lot of comfort, not only on the physical existence, but also on other aspects like, valuation, whether it is obsolete or not. And that's why doing physical verification is very critical. What assertions are addressed by attending the physical verification? So as you are aware, there are multiple assertions for balance sheet item. It is completeness, it is existence, rights and obligation, presentation and disclosure. So of course, if the auditor does physical verification, existence is the assertion which auditor tries to get comfort on. Whether only existence, or the auditor can also get a comfort on right and obligation, on right. The answer to that is, generally auditor gets comfort on the existence only, not on the right, because at times the inventory would be physically lying at the site, but the owner would be someone else. It could be customer, because if it's already billed and the contract is worded in such a way that risk and reward or the control has been transferred. So in that case, whether the right is also with the company, for that auditor may not get comfort directly. Yes, indirectly he might get comfort, or he might get some comfort, but for getting comfort overall on other assertion, definitely auditor will have to perform extra procedure. Does existence of inventory confirm ownership? That is what I think we discussed. Existence of inventory does not confirm ownership directly. Of course, it is an indicator, but it does not directly confirm ownership. Does it also confirm valuation assertion? Again, it helps definitely in valuation assertion, because if there are damage inventory, or there are expired inventory, auditor definitely gets comfort by checking those, and auditor definitely will insist to make a provision. But otherwise, for valuation, auditor will have to perform again a different procedure to get comfort. What are the circumstances in which conducting the physical count of inventory is impracticable? Now, again, here the standard says in each and every case, auditor should attend the physical verification of inventory, which is done by the management. However, in very few circumstances where auditor is not able to do it because it poses significant risk, then it may not do. But otherwise, in all the circumstances, it is he is required to attend. I'll just read out paragraph 812 of the auditing standard, which is very important, and I think which throws a very good light what standard is trying to say. It says, paragraph 812, it says in some cases, attendance at physical inventory counting may be impracticable. This is maybe due to factors such as nature and location of the inventory. For example, where inventory is held in a location that may pose threat or safety to the auditor. The matter of general inconvenience to the auditor, however, is not sufficient to support a decision by the auditor that attendance is impracticable. So what it tries to say is, if it's very serious problem for the auditor to attend, and which when I'm saying serious problem, it basically says it may put a very significant risk to the auditor from safety point of view, then in that case it is fine. But otherwise, in all other practical cases, auditor will have to attend physical verification. Now, in current scenario, what we have seen is COVID-19, which the entire world is seeing in last 2 years. Definitely, initially, the first wave and second wave were quite strong, and auditors could not travel. One is not because he doesn't want to travel, but again there are government restrictions. Now, in that case, definitely auditor will not be able to do physical verification himself, and hence that can be taken as an excuse. But can inventory be completely disregarded in this COVID-19 scenario also? Again, the answer is no. So auditor may not be able to do the physical verification directly, but then he'll have to perform alternate procedure. And what is alternate procedure? Again, that will cover as to how to get comfort through alternate procedure. In fact, I have a slide subsequently on COVID-19, and we'll cover that in detail. But as of now, audit, as a part of audit, auditor will have to attend physical verification. And in a very remote scenario where it poses a significant risk to the life of the auditor, only those circumstances it is excused. What kind of alternate procedures can be performed in case auditor is unable to attend inventory count? Again, a very good question. So generally, auditor gets comfort directly from physical verification. And as we discussed in the initial part, that a direct confirmation definitely helps and gives a lot of comfort rather than indirect confirmation. Now, physical verification is a direct confirmation, it's a direct procedure. But if that is not possible for whatever reason, then again, alternate procedures can be performed. What are the alternate procedure? Alternate procedure, one of the procedure could be checking subsequent sale, checking subsequent collection. So if there is an inventory, the inventory auditor could not verify on 31st of March, that is fine. But auditor actually seeing the invoices that it is billed subsequently to a third party. The auditors also checks, the proof of dispatch, whether it is lorry receipt or bill of lading. Auditor also says subsequent recovery, and then by doing that, auditor gets a comfort. Second way could be, auditor could not do physical verification on March 31st, say, which is the year end, because of some XYZ reason, but auditor can do it after 15 days. So, do it on 15th of April, whenever it is possible, and then do the backward calculation. So the management will prepare the data of inventory on 31st of March, on 15th of April, and the movement between these 2 days of, of the production as well as sales. Auditor can check this production data and sales data on a test check basis. And if it is found perfect, then auditor gets comfort through this alternate procedure. What would be the impact on our reporting in case auditor is not able to attend the physical count and also not perform alternate procedure? Now, here in this case, if auditor is not able to do physical verification directly, then again, as we discussed, second step would be to get comfort through alternate procedure. But even if alternate procedures are also not possible, then the only result is some kind of modification in the report. Now, whether modification in the report is qualification or disclaimer or emphasis of matter, that is very subjective. That will depend on each and every case separately, depending upon the size of the company, depending upon the size of the inventory, depending upon the other risk, depending upon what is the underlying problem, and based on that, auditor will have to take a judgment as to what kind of reporting would be required, emphasis of matter, qualification, or disclaimer. Is physical count of inventory mandatory only for audit? Again, the answer would be subjective. For audit, definitely it is compulsory. But even for limited review, at times, if it is having significant movement, or if it raises a doubt in auditor's mind that something is unusual, in that case, because of the volume of the inventory or because of cycle in the industry in which it is not necessary that auditor will have to do physical verification only in case of audit, but in case of limited review also, in those cases, auditor will have to perform physical count. How will you select samples for testing inventory count? Again, as an auditor will try to satisfy himself by performing the procedure which gives the comfort in terms of overall value and also in terms of control. Why control is critical? You have seen now companies growing. Think of companies which are into retail sector. In retail sector or in QSR, quick service restaurant sector, there are multiple sale point. So company would be headquartered in Delhi or company would be headquartered in Mumbai, but it will have stores across India, and the number of stores would be could be 500, 1000. Now, in those cases, it may not be practical for the auditor to visit each and every store, and hence the checking of control becomes very critical, right? So one is checking of the control from the management side. If there is a perpetual inventory count, what are the controls management is having for perpetual inventory count, and whether those controls are operating effectively. I think that's very critical from the auditor side. And second thing, if the ICFR and controls are effective, then of course auditor's responsibility will reduce overall on substantive, and auditor can leverage that experience on test of control while performing and planning it substantive procedures for the year end. So nonetheless, definitely the company will have to carry out physical verification at least once in a year, and for A, B, and B category of items, definitely should try to do on a regular basis. But even C items, so all A, B, and C category of items need to be covered at least once in a year. And auditor also will perform procedure which are sufficient to give the comfort. So one is definitely, as we discussed, checking of control. But second thing, also to cover all the high value items. So all the high value items, auditor should cover 100%, which gives comfort. And the remaining, the auditor can perform on a test check basis. So selecting some samples and checking those from, say, physical sheet to the book, and vice versa also. Selecting few samples from book and verifying it physically. So both the way perform physical count by selecting few samples from book to physical, for some samples from physical to book, and a few high value, check 100%. So those would be the ideal approach from auditor's side. What will you do if you observe significant differences between book stock and physical stock? Now, generally, if ICFR is effective, generally the company should not have any differences or significant differences at least between book and physical count. Now, but however, if there are differences which are found and which are significant in terms of book stock and physical stock, auditor needs to see this very critically, not only from inventory and financial statement risk, but also from ICFR. If there are high differences, then it raises a question on the entire ICFR net framework. So one, the auditor needs to review ICFR opinion very critically, whether it requires any modification on ICFR. And if ICFR is being qualified or modified, does it also require any modification in the mean audit report? So that is one. Second thing, CARO 2020 has also undergone a change, and which says that if there are any differences which are higher than the 10%, then the auditor needs to report very separately that the differences were found which are more than 10%. And the CARO says it is separately for each class of inventory. What do we mean by each class of inventory? Class of inventory is meant to be raw material separately, packing material separately, work in progress separately, and finished goods separately. So if company finds, or if, sorry, or the auditor finds a difference, say in raw material, which is higher than the 10% of the closing value, then the auditor will report in CARO report saying significant differences are found, which is more than 10% in the value. Or similarly, if the differences are found in FG and not in RM, then auditor will have to say the comment saying, in FG, the differences were found, which were more than 10%. Now, again, just to highlight, CARO is talking about 10% of the inventory item. It does not say whether it is value or count, but it is, assumed, and in fact, the guidance note also clarifies that 10% of value should be considered, not 10% of the quantity. Now, 10% of value is a number which is given under the CARO and under the guidance note. Now, what is critical is auditor's materiality could be completely different. So, for example, if I am doing a very large company and my materiality is say 10 crore rupees, and the differences in raw material is say only 1 crore, but it is higher than the 10% threshold because the value of the inventory is only say 8 crore. 10% of 8 crore is 80 lakh, and the difference in raw material at the year end is 1 crore. Guidance note says if the difference is more than 10%, auditor has to report in the CARO report. Now that 10% limit is breached, even though my materiality as an auditor is higher than that, still I have to disregard my materiality completely. I'll be reporting if the 10% limit is breached. What is the extent of documentation to be maintained in the file? Of course, as an auditor, the documentation is very critical. So what is critical for the auditor is to get the instructions, what management has sent to the person who has gone for inventory count. I think that is very critical. How the inventory is planned by the management, because auditor comes subsequently. First, the responsibility to prepare the accounts, to prepare the financial statement, to perform the inventory count is on the management. So as in first step, auditor needs to get instructions from the management of how they are being instructed to do physical verification. Second step would be to also see the person who is doing physical verification is in a way independent. So it is not the same person who is in charge of the inventory. Say, for example, the raw material in charge is only doing the physical verification from the management side. He can be there, but someone who is independent internally, say, for example, team from accounts side or team from finance or a third party, for example, internal audit department, even though it is in-house internal audit department, but still it is critical that segregation of duty is maintained by the management. That is very critical. So who is doing the physical verification from the management side? And it should be slightly independent. Of course, finally it is from the company side. So we cannot say it is completely independent, but still he should not be fully responsible for physical custody of the inventory. So that is second step. Third step is definitely the paper, the book stock, which was there on the year-end date, that should be maintained. Fourth, before the inventory, the cutoff procedures should be ensured. So recording of the purchases cutoff, recording of the sales cutoff, to ensure the inventory is recorded properly in the books. And finally, physical count to ensure coverage, as well as few samples, as we discussed, from book to floor and few samples from floor to book. So those checking if there are any differences, what are the differences, reasons for differences, and finally linking of the physical count with the inventory valuation worksheet. In my practical scenario, what I have seen teams doing, even teams below me, generally they go for physical count, they mark the differences, but finally there is no link between what is the amount of inventory or the quantity of inventory physically found with the inventory being valued for financial statement. And if that link is not there, then the entire exercise of doing physical verification goes futile. So it's very critical that the linking of quantity which is physically verified to the quantity which is getting valued for financial statement purpose is linked properly. Okay, mandatory attendance as physical inventory that we have discussed. Yes, it is mandatory for auditor to attend physical inventory. But of course, first of all, the responsibility is on the management side. And from the management has to plan properly. The inventory is done at a proper time. taking proper cutoff, and if possible, the material movement should be stopped so that the inventory is smooth, inventory is not counted double. So that is very critical, and auditor, to the extent possible, should pre-plan this in discussion with the client management to ensure that the physical work is stopped, at least for few hours, so that FG and raw material is taken care immediately without any stoppage. Stores and spares inventory, which generally takes time because of the volume, that if it is not possible, maybe that can be done at the time of production is on, and then the auditor can do roll forward or back roll back procedures as required. Evaluate management procedures for counting, recording, and controlling for results of physical counting that we have discussed. Now, what is the periodicity of inventory count? So, as we said, at least once in a year, it is very critical to cover the entire inventory. But once in a year, it is not sufficient. Once in a year is minimum. But it is always prudent to do ABC categorization of the entire inventory. C category, which is very low value category, should be covered minimum once in a year, but the remaining A and B should be on a recurring basis. In fact, what I have seen in generally most of the companies which are having a good ICFR framework, they perform inventory for A class almost on either a fortnightly basis or a monthly basis at least. So companies can devise their inventory physical verification plan in a way which suits their requirement. It should not be multiple work, which becomes very cumbersome for the management to do it. However, it should also ensure that the control is not diluted. So for A category item, definitely either once in a fortnight or once in a month. The B category item can be done once in a quarter, and C category item can be done once in a year. Now, the auditing standard or accounting standard does not give any rule. It depends on the industry, depends upon various factors like inventory value and other benchmark. But auditor as well as the management will have to take their own call as to what is the sufficiency of inventory count. Attendance at count involves test existence of assertion of inventory and also condition by performing test count. So as we discussed, for FMCG and pharma, it is very critical. Generally, I've seen while performing physical count, you see the few inventory are lying on some corner. You go there and inquire, and then you come to know that these are not moving frequently. And at times the batch number is quite old. So then you get those queries as to why it is not moving, what is the reason of it is not moving. So in the book, everything would be looking good, because finally in the books, it will be not separated, as a batch from the regular batches, and it will still form part of the regular batch. But by physically counting it, physically seeing it, you get these inputs saying it is not moving, it is damaged, or it is expired. Other thing what is critical for auditor to see is observing the compliance with the management instruction. The auditor would be doing on a test check basis, but the management does the inventory physical count once in a year, which is 100%. So what management is doing, whether they are following the instructions properly or not, the instructions which are issued by the top management, whether those unit people are following those instructions, thoroughly. I think that's also very critical for the auditor to see it, because the checking from the auditor directly would be on a test check basis. So observing compliance with management instructions is again a critical. And finally, based on that, auditor can take his call that whether if those are followed properly, whether it can rely on management count procedure or not. If the instructions are followed properly, if the team what is doing the work is independent internally, if they're taking proper cutoff, then that gives a lot of comfort to the auditor. What are the matters relevant in planning physical count procedure? Of course, the nature of inventory. Nature of inventory is very critical. For example, if there are perishable inventory, and which basically, especially in say quick service restaurant like McDonald's or Burger King kind of world, or if there are perishable inventory which are generally kept only for 3 or 4 days, then probably auditor may not be worried too much, because auditor knows the sales cannot happen if the inventory is not there. So that gives a lot of comfort. But if on the other way, if the inventory is say of a long duration, then I think it is all the more reason for auditor to spend time and do the physical verification. Stages of completion of work in progress. If there are huge work in progress lying, then again it becomes very critical for the auditor to spend time on WIP inventory to understand at what stage it is lying, to understand how the valuation is linked to different stages. So that auditor will be able to judge and take a call only when he sees the inventory physically. Risk of material misstatement related to inventory. In certain industry, the inventory value would be very insignificant, but in certain industry, the inventory value could be quite significant vis-a-vis the turnover of the company and also the profit of the company. A very classic example is say jewelry. Now, in jewelry business, where the inventory of bullion and gold and silver is, or diamond, for example, if it's lying in inventory, it becomes very critical for the auditor to spend more time and focus on inventory. Now, in that, definitely physical count is critical, but auditor may not be in a professionally or technically fit to do inventory physical verification by himself. In that case, auditor may take help of expert either from management side and if required even from auditor side. So it can appoint a technical person to see and validate the claim by the management. So that's another thing. Nature of internal control related to inventory that we already discussed. What are the controls? What are the ICF? What is ICFR framework? And whether those controls are operating effectively. If the controls are operating effectively, auditor gets more comfort, from ICFR, and then the substantive work on inventory can be reduced. Whether adequate procedures are expected to be established and proper instructions are issued for physically count, that's again critical. Timing of physical inventory counting. Now, there are many standards which says if the risk of material misstatement is high, then in that case, the physical verification should be performed either at the year end or nearest to the year end. So if the physical inventory value is quite critical, quite significant, if inventory is scattered at multiple places, if inventory is significant in value vis-a-vis turnover or vis-a-vis profit of the company, then auditor should try to do physical verification on the last day of the year. So for example, if the year end is 31st of March, auditor should try to cover inventory on 31st of March itself. However, if it is not possible, then nearest to 31st of March, say maybe 1 week early or 1 week subsequent to the year end, and then perform either rollback or roll forward procedure. If the company is maintaining perpetual inventory system, again, the auditor should go through the perpetual inventory system. How does the management is doing the perpetual inventory count? What are the records being maintained? How the corrective actions are taken by the management? Who is doing the physical perpetually count? So those things are very critical. Comprehensive details of various locations of inventory. So for example, at times the inventory is I have seen generally in many companies, the details of inventory is kept quite meticulously. So that also gives comfort to the auditor. At times, the nature of the inventory also could be completely different. So for example, the companies who are into natural resources, so say for example, companies who are into coal mining or cement companies where limestone or coal are significant inventory, and those are just built up in high, and it's very difficult to measure the inventory. At that time, again, it's very critical for the auditor to take help of expert. And there are a few engineering firms who are specializing in this field. Auditor can definitely take help of them by telling the management to appoint them and do physical verification on a periodic basis. And these firms use scientific measure for inventory count. So that gives a lot of comfort, which auditor with a finance background may not be able to do it. Use materiality and risk factor to determine the location and nature of inventory to be covered. Again, this is quite critical. So if there are 10 locations and the amount of inventory is different at each location, auditor will have to do a pre-planning to see what will be the likely inventory on year end at different location and pick up the locations which gives more comfort, more coverage, and in terms of value as well as in terms of risk. So at times there are multiple segments, and few of the inventory value would be high, but the risk is limited because it's a fast moving. Whereas in other case, the inventory would be lying for a long time. So auditor will have to see both the factor and decide for the physical count. What are the other factors to be considered for performing audit procedure? So provision for control of receiving, dispatching, and movement of items during the count. If the plant is not shut down, if the plant is shut down when well and good, if the material movement is completely stopped, then it is easier for auditor to perform physical count. However, at times we have seen that it is a continuous process plant and it may not be practical for the company to stop the production. In that case, the company will have to see what are the procedures being followed by the company in terms of physical count, in terms of segregation of inventory, segregation of duty of the person who is doing the inventory. Finally, if the proper cutoff is taken from WIP, work in progress or not, who are the person who is checking, who is the person who is reviewing. So those checks are very critical. Finally, use of the count sheet tags, including distribution and collection and control. So those are some of the critical things. What are the management controls for identifying obsolete, damage, or slow moving inventory? Then if the inventory is lying with the company, but which is of a third party, for example, if the inventory is sold, but it is bill and hold, or other way around, if the inventory is sold, but it's sold on consignment basis, but it is lying with a third party. So then getting confirmation from the third party is also quite critical. Method of compiling from original count to the final sheet. That's again very critical. So summarizing, if there are multi locations, so finally from each location, the inventory is compiled and then tallied with the book. At times I have seen, even if it's a one location, in one location, the inventory is spread across. So if you find this kind of observation, you need to be more vigilant as to why the inventory is spread in the same location, why it is not kept at one location. So for example, if in one warehouse you see item A is lying in one corner, similarly the same item A is lying in second corner, third corner, it raises a doubt on the completeness as well as the intention of the management. If that is the case, then definitely you should highlight to the management as to why this inventory is scattered and why it is the same item is not kept at the same time. And finally, supervision, review, and control for the person who is doing the physical count. Review controls over physical count that we've discussed. Finally, coal or glass or fuel, there are various techniques being used. It is, may not be possible for auditor to directly visit if there are big vessel in which fuel is stored. In that case, again, scientific methods are used by taking a dipstick and then based on the formula of chemical, you arrive at the value. So at times you need to understand those nitty-gritties and arrive at the inventory count. Performing cutoff procedure, as we discussed, it's quite critical. Cutoff is critical from both the sides, from inventory count and from revenue side also. So revenue cutoff also the auditor will have to do to ensure all the sales which are done up to 31st of March or up to year end are recorded properly, so that there are no inventory for which the invoice is done, but the inventories are still lying in the books. Similarly, for purchases, whatever the purchases are booked, the inventory is received, and whatever inventory is received for those underlying purchases are booked. At times, what generally you see that inventory is received at the factory. It is waiting for inspection from the quality department, and hence it is not entered in the books. If that is the inventory, then it should be earmarked separately in a specific area. It cannot be taken to general area. And if you find lapses, definitely you need to discuss with the management as to why there are no controls properly put in place. Then again, determining the stage of completion to understand how much allocation of overhead should be done, because at times, generally in few industries, there are multiple stages of completion, and each stage of completion will have a different value attached to it based on the stage of completion. So raw material would be definitely issued at one go. Of course, then there are a few chemicals and excipients which are added subsequently in stage 2, 3, 4. But the labor and overhead vary depending upon stage at which it is. So if a particular item takes a 10 stage for production, then at what stage the work in progress is lying, and how do you measure the overhead for the purpose of calculation of inventory valuation is quite critical. Getting a list of inventory maintained at third party is also very critical. Ensuring completeness, checking what are the controls for inventory lying with third party is quite critical. And finally, if you can also do physical verification at third side. So if getting confirmation definitely from a third party is critical, but if as an auditor you feel that the significant inventory is lying with the third party, then it becomes critical for the auditor to physically verify that site as well, even though it is not directly within the premises of the company. The classic example would be third party manufacturer. So if significant amount of inventory is lying with a third party manufacturer, as an auditor of the company, you may go to the third party and physically verify the inventory of your client which is lying with him. Okay, some of these things we have discussed, so I'll not cover all, but definitely the focus has to be on category A item rather than B and C. And generally I've seen if the team is not instructed properly, they will start the work without applying their mind by doing the physical verification of whatever they see on the site. And after spending multiple hours, a couple of hours, they would realize, in terms of value, they would have covered just 1 or 2%. So it is always critical that you do a proper planning. Before doing physical verification, auditors should try to get the expected value of inventory. And if expected value is not available, at least the value which was there 2 days prior or 1 day prior to the date of physical verification. By analyzing those, at least the auditor can make out which are the critical items in terms of high value, high quantity, and auditor can devise the entire methodology, where to focus, which item to focus, where auditor can find non-moving items, where auditor can find slow-moving items, and then auditor can definitely perform procedure which are more sharper as compared to the general procedure. So my suggestion would be a senior or a partner should spend more time on planning the inventory rather than just leaving to the team. Then I think some of these items you have already covered, so I'm not going to discuss those. But obtaining copies from the management, certified by the management, is critical. Again, what is very critical is ensuring all the locations are covered. So generally, you would try to cover the major location, and then client would say, then these are the 2 more locations which you not visited. So I think it is always critical to ensure all the locations are covered. And how do you do that? So basically get the value of all the inventories lying, tally with the books. So if it is not matching, you will come to know that there are a few other locations which are not given by the management so far, and then you can plan accordingly. And the last point is, I think, is also very critical. When you do physical verification, ensure the physical verification is completed at that location completely. So don't move from one location to another location without covering the 100% of that area. Otherwise, if the material movements are happening, it's very difficult to control the inventory count as well as get a comfort on inventory value. Okay. The first point I think we've already discussed. If it's impractical to do inventory count on 31st of March or on year end, the auditor will have to do in the nearest time and then perform either roll forward or roll back procedure. However, a documentation of that is very critical, in terms of what is the movement, checking those few movements by checking the underlying sales invoices along with the underlying proof of dispatches. Similarly, for receipts for production, checking underlying production papers or purchase papers on a test check basis. Inventory under custody of third party. As we discussed, if the third party is very significant, then definitely auditor should try and do physical verification at the site. Otherwise, at least get a physical verification signed report from the third party, and if required, from the third party's auditor, which we call service auditor report or SOC report. SOC report is very critical and internationally quite recognized. So if the third party is audited by another auditor, the auditor of that company issues for inventory lying with the third party, which is owned by you. So that is very, very common practice globally. Again, in India, it has not got that much momentum, but we have seen in many companies have started following this. In maybe few years to come, it will be again a common scenario in India as well. COVID-19, last couple of years, we have seen, the entire world in a different scenario because of travel restrictions. Auditor is not able to do physical verification directly, and that poses a significant challenge. So how do we do a physical verification if there are travel restrictions and if auditor is not able to travel? Again, there is no fixed answer. Definitely, first of all, if it is possible, then auditor should travel. But however, if it is not possible, then what auditor should do? In that case, the first point is auditor can definitely take help of a local firm based out of the same vicinity. So if, for example, if I am based out of Mumbai, but if the client has got a factory in, say, Gurgaon, then definitely I'll try to engage with a firm in Gurgaon and do the physical verification through that firm. However, the second option also could be do virtual physical count through virtual monitoring. So, through Zoom or through Teams meeting, the client personnel can actually show me physical verification I can attend in a virtual mode. However, again, it is quite challenging to do virtually. So if there are red flags, definitely auditor should not do virtual only. Then auditor should perform some other alternate procedure. And third, again, would be in this kind of scenario where there are a lot of uncertainty, don't wait only for the year end. What we have done in this year, when in February and January and February, when the situation was quite normal, we did not wait for March 31st. We said, let's go in interim, let's complete the physical verification. So even if by chance, if you are not able to do at the year end, we have done at least one count during the year. And then it is possible for us to do roll forward procedure or rollback procedure and arrive at year end valuation or year end verification. So these are some of the techniques which can be used for COVID-19. And lastly, if you are not able to do for anything, then again, you have to think whether to do modification in the audit report. So these were the few things which I wanted to highlight on inventory. Going to the second topic of litigation. While litigation and claim is critical, again, this could be significant in terms of value. Generally, there could not be any value. So if management does not give you the detail, it may remain completely out of the book because there may not be any accounting entry, and auditor could be taken by surprise if the demand comes and if it is not recorded. As per the accounting standard, whether it is Indian GAAP or Ind AS or IFRS, auditor is supposed to do assessment in terms of PPR, which we call as probable, possible, and remote analysis. If it is probable, which means very high chance of company losing it. Again, it is not defined with what is probable, but if it is 80-90% chance that company may lose it, then it is probable. Then in that case, company will have to provide for that liability in the financial statement. After probable, it is possible. Possible scenario is where it's a 50-50% chance. 50% chance of company winning the litigation and 50% chance of the litigation coming against the company. In that case, generally the view is it is shown as a contingent liability and it is not accounted in the financial statement. And the final categorization is remote. Remote is where there is only 5 or 10% chance of the order coming against the company. In that case, again, there are two views depending upon the amount. If the amount is definitely very material, then you may show as a contingent liability. However, if the amount is also not material and the chance is remote, then you don't do anything. You simply disregard that demand. So in last couple of years, Competition Commission of India has given penalty on many of the companies, including cement, telecom companies, tire companies. Similarly, income tax has raised demand on multiple aspects. Maybe some of the aspects are related to Ind AS, where in one of my client, large demand was issued, where on account of a business combination, when fair valuation principles were applied and there was a demerger, the income tax regarded this demerger as a distribution of dividend to the shareholder, and a dividend distribution tax liability was raised. So what I was trying to say that in the current scenario, the accounting has become very complex. We have seen regulator at times take completely different view which is not intended, and they may put up a liability on the company. Now, it is very critical to see and analyze this litigation from audit point of view. What do we do for ensuring completeness of litigation? So, of course, there are a few procedures. First of all, there has to be a detailed inquiry with the management. When I'm saying management, definitely it has to be a discussion with the CFO, with the CEO, and also the legal head, legal counsel. So if there is in-house legal counsel, the auditor should discuss all the cases in detail with in-house legal counsel. If it is external legal counsel, then of course the auditor will have to go through and have a meeting at least with the external legal counsel to ensure if there are any litigation which is impacting the company. Second is review of minutes. Minutes of the board meeting, minutes of the audit committee. Many times company has risk management policy, a risk management committee. So going through the minutes of all these committees will help the auditor to gain an understanding if there are any litigations ongoing and if there is any new order which has come against the company. Corporate governance requires the company to have risk policy and also to ensure internally CEO and CFO certification. Now, CEO and CFO certification is ensured by the management by having internal policies on compliance with different laws and regulation. So if company has implemented this kind of mechanism where each unit or each location in charge reports to the legal team or otherwise to the CFO or finance team on any non-compliance, auditor also should review those tools to see if there are any exceptions noted in the current year. The next but very critical thing is the legal expenses scrutiny. Auditor should go through very detailed 2-3 accounts. One is definitely legal and professional fees as to what charges are coming in legal and professional fees, and especially if the fees are paid to any lawyer, what are the services availed? Are there any litigation? Similarly, the other account which is very critical is rates and taxes. At times, we have seen generally if there are any disputes, the company will pay 10% or 20% of the amount which is payable, and they will charge off in rates and tax. So scrutinizing those accounts also will give good insight to the auditor on different litigation. And finally, getting letter of representation would be very critical. Direct legal confirmation. So when auditor should try to get direct legal confirmation, if there are litigations ongoing, then definitely the auditor should get a legal confirmation. Now, legal confirmation should be obtained from external legal counsel through a letter of general inquiry. However, many times we have seen the experts who basically are the lawyers, they did not reply to general inquiry. In that case, auditor will have to say very clearly, make a specific inquiry for a particular case. So if the litigation is ongoing, say for Competition Commission, then auditor will have to write to the legal counsel as to what is the development on that particular matter in last period, and if the risk assessment has changed over a period of time from the last it was reported by the legal counsel, and if yes, what are those, and based on that the auditor will have to take a judgment. At times, it becomes very critical that not only the legal confirmation, but auditor may have to meet the legal counsel in detail. And there could be cases, this could arise when there is a dispute or there is a disagreement between the auditor and the management. If or the legal confirmation which is received by the auditor is not clear on conclusion, in that case, it is advisable for a personal meeting with the legal expert, and then sort out the extra information which is required to satisfy himself. Finally, the written representation, I think that's also very critical. Auditor should get a written representation from the management in terms of completeness of the litigation, in terms of all the litigations are explained, are provided to the auditor for their assessment. And if required, auditor also should involve internal expert. When I'm saying internal expert, in the sense, if the matter is very significant, at times the consultant who has been appointed by the management may also be biased. For example, because he is first of all fighting the case, he is being paid by the management, and hence to take a different call or to take a different view would be very difficult for him. Second thing, he is also biased because he's fighting the case. He would definitely feel uh, on a positive side. In those cases, it becomes critical for the auditor to get a view from a third party. Now, the third party should be definitely be appointed by the auditor, but definitely that expense then can be discussed and be charged to the client. Third thing, what is very critical is segment information. SA 501 deals with audit procedure to obtain sufficient appropriate audit evidence for presentation and disclosure of segment information. Now, segment information may be under Accounting Standard 17 or it could be under Ind AS 108. Both the framework are little different. So one is talking about risk and reward. The Indian GAAP talks about risk and reward. If the risk and reward is different, the segments are different. Whereas segment 108, Ind AS 108 on segment reporting talks about the internal design and structuring of the segment, which is given to the CODM, Chief Operating Decision Maker. How the segments are given to Chief Operating Decision Maker, and based on that only, the same information needs to be given to the shareholder. So auditor needs to see what are the methods used by the management in determining the segment information, evaluating whether such methods are likely to result in disclosure in accordance with the reportable framework, if it is consistent with the accounting policy, and if the methods are consistently applied or not. Generally, what I have seen in segment information is what is very critical is how the segments are defined, first of all. At times we would have seen the risk and reward would be different, but those segments may not be disclosed correctly in the financial statement because the intention of the management would be to show, as far as possible, very less information to the investor and to the outside world. So if the risk and rewards are different, then the auditor should assess and challenge the management as to whether the disclosure made is sufficient or not. Similarly, if under Ind AS, if the reports which are going to the chief decision maker are completely different as compared to what is given in the financial statement, auditors should challenge as to why the same information is not shown as segment reporting. Second, what is very critical is how the revenue is being measured. So at times we have seen the revenues are arrived based on some hypothetical number, whereas a standard requires it should be arm's length. So for example, if there is a division A, division B, division A output is used internally, say by division B. In that case, the transfer pricing between A and B has to be based on the market practice. So if division A is selling in the outside market also, and if it is selling in-house also, it can't have any arbitrary margin. The same price at which it is selling to the outside world should be used as a transfer price to arrive at the real profit of division A. At times, generally the management tries to play around on the transfer pricing. Similarly, on the cost allocation also, practically we have seen many times challenges. So allocation of expenses is not proper. Allocation of expenses is more tilted towards the units which are doing good, and less corporate expenses are allocated to the units which are not doing so good. So those would be critical. Another thing which is critical is how the loans are charged uh, to the segment. So if there are specific loan, then those should be allocated to the segment. It cannot be at a corporate office, because generally we have seen cash and bank and treasury is at a corporate level, and these are not allocated to segment. However, if there are any specific loans which are taken for a specific project, specific segment, then that loan also needs to be allocated to segment. So I think those things are very critical to ensure the segment disclosure is proper. And finally, performing analytical procedure, seeing current day performance with last day performance, seeing the accounting policies are consistently followed. Those are the critical things which auditor will have to follow to ensure segment information is proper. That is it from my side, and probably we can take up question answer now. Over to you, Anilji.
Thank you so much, sir. Can you hear me?
Yeah.
Vinny is also here. Hemant sir, on behalf of WBSP of ICI, I extend my heartiest thanks towards both the speakers. Hemant sir has also covered so many things on the special aspects of the this audit evidence, and basically in detail physical verification and all. So I am having certain questions for both the speakers. First question is relating to, sir, in some industry, the unique nature of inventory requires expert work on the quantification, evaluation of the status of inventory, etc. For example, diamond or mine stock, in which cases the attendance may not be contributing much. In those cases, SA 501 must yield to SA. On say, SA 620 use the work of expert. Please add your thoughts on these lines.
Yeah, I agree. So as we discussed, now whether it is a jewelry or whether it is a natural resource like mining, where the inventory is kept in big heaps, auditor as a with a finance background may not be able to add any value. So in that case, it makes more sense to employ expert in this field and get this area done through expert. But now what is critical is, I agree, auditor may not remain physically there, but in those cases, I think it is very critical to see what kind of engagement letter is issued. The auditor should see the scope in detail. Auditor also should see the expertise of the expert. So expert who is getting employed is having relevant experience, is having relevant qualification. I think that's very critical. And the third thing which I would say is also to ensure that these experts are at least changed on a rotational basis. It is not
Yes.
it's not good or a good practice to continue with the same expert over a long period of time. So there has to be rotation of duty. But I agree with the question that in these cases where there is a specialized inventory, auditor's physical attendance will not be of significant value. But having said that, I would still say that at least sometime auditor should be present in those kind of scenario also. Because by observing, auditor may come out with some suggestion for further improvement in those areas.
There is one question for Vinay. One member is asking about small distinction between internal and external evidence in this audit.
So internal and external, basically, as the name suggests, internal audit evidence are those audit evidence which
Means they are sorry to interrupt. They are also asking the external evidence, to what extent we can rely on.
to what extent
If
we
you're
can.
talking about internal and external, both the evidences, and they want to have this distinction and asking on what extent we can rely on the external evidence.
So, firstly, distinction between the internal and external, I would like to address that first. Any kind of audit evidence, any kind of information, or any kind of discussions which are held from within the organization, like with the management or with the people who are associated with the audit, maybe finance department or other secretarial department, or any other kind of documentations which is provided by the organization which is under audit, wherein the intervention of the management is involved, or any other employee who is facilitating the audit is involved. All of those information is pertains to internal audit evidence, wherein the management is involved. Whereas external audit evidence is those audit evidence which we procure from the third parties, which are independent from the management of the organization, wherein the organization has no control over the evidence or the verification balances that are being provided by the outside parties. And so this is the basic difference, and they have no control over it. Now, coming to the second part of the question, wherein till what extent we can obtain the external audit evidence. So the limitation of external audit evidence is such that only those aspects wherein the third parties are involved, for only those aspects we will be able to obtain external confirmations, especially when we talk about like bank confirmations wherein bank is involved, or we talk about debtors or vendors wherein other parties which are independent of the organization are involved. Only to that extent we can obtain external audit evidences. Like we just talked about physical verification, in which Himal ji just talked about, that we can use the work of an expert. So through that expert, we may obtain external audit evidence through the use of that expert. But yes, the extent of usage of an external audit evidence also depends upon the competence of that third party, the capability of that third party, which is providing that information. If we have certain doubts over the capability of such a third party, then that external audit evidence may not necessarily be as reliable as an internal evidence. So that is also one of the exceptions which we need to consider while obtaining external audit evidence from outside the organization.
Similarly, on the basis of this, we are having one query relating to this oral confirmation. While we just gave a phone call and have a confirmation from another party, and he is asking about what is the tenability of this oral evidence to defend the auditor later on. Should every oral evidence not be documented for confirmation by the person who gave it?
See, particularly oral audit evidence, there is always a limitation as to how to document it, and
Yes.
if any oral audit evidence has been obtained. So basically, what the major advantage of oral audit evidence can be that it can be based to other audit evidences. That can be one of the major criteria, wherein if we have had any kind of discussions or inquiries or any telephonic conversation or a face-to-face conversation, based on those discussion or inquiries, we may form our observations, or we may form a basis for gathering different types of audit documented or any other form of audit evidence. So there is a slight limitation in procuring the audit oral documentation, and standalone oral audit evidence may not be the sufficient and appropriate one, because there might be discrepancies on what is being said, and later on if it turns out to be otherwise. But then it can be a good basis for obtaining other audit evidences. But also, in case of documenting of oral audit evidence, one needs to ensure that if we are holding any kind of discussions, whether virtually or face to face or physically, the minutes of those discussions are being documented, and both the parties who were involved in these discussions either sign on it, or they put an identification mark wherein they can prove that, okay, this was the oral discussion or meeting had taken place, and these were the agendas that we had touched upon, and this is what we had discussed, and then that written document can be a part of audit evidence.
Another question is for Hemant Shah, sir. You have already covered this audit relating to the COVID time. You have already covered. The question is relating to the same in case of COVID restrictions, how the audit evidence are to be obtained and how to rely on those evidences. Also, how the reporting will be done. It means if you are sitting on some other place, or the bank or the branch or the client is on the far-flung area, and due to the COVID, we are not going to go over there. And if we are asking कि आप उसको scan करके हमें भेज दें, या the client is saying कि I am just going to scan the documents and sending it to you. So how to rely on those particular evidences? It is quite possible that while scanning something has done or not. So after that scanning, still document is required, or original copy is required, or original evidence is required even after the scanning, or through the mail exchange, if it is afterward which is required, or how to deal with all those evidences which we have taken during this COVID time period.
So I understood the question on how do you do inventory count during COVID, but the question is on documents of which documents, the inventory count which was done by the management.
Any document relating to this, whatever is required by the auditor. Because if you are sitting on the far-flung area or some other place, and from another side they are just going to any related document which is required by you, they are going to scan and send it to you.
Yeah. So one is, if possible, definitely the auditor should try to do physical verification by visiting the site. But if it is not possible, then as we discussed, auditor should try to get a local CA firm who is independent to get the physical verification done, an extended arm for himself. So that is the second alternative. Third alternative would be to do virtually. Now, on the question of how to get the documents scanned and sent, again, there is no fixed answer. I think auditors should try to get a comfort. So if the physical documents which are done by the management, those ideally should be signed by the person who is supposed to sign. and those documents, if then I get it scanned, then it is fine. Otherwise, suppose if the documents are too bulky, and if I get a response that it's not feasible for the person in charge to sign all the documents, then I would suggest that he should, at least auditor should get the mail from the same person who is in charge. If I get a mail from his ID in which he writes very clearly that these documents are reviewed by me, and because of COVID-19 or other factor, I'm not able to send the physical copy, but these are the reviewed copies, and if I get this mail from his ID, then I would be fine.
Ji. As bank audits time is going on and they are on the burst time, there is one or two questions relating to the bank audits. Vineet ji, one member is asking, is direct bank balance confirmation is compulsory when you have the bank statement printed from the bank, or confirmation is letter is to be obtained from the bank?
Vineet, you are on mute.
Definitely, bank balance confirmation is one of the mandatory audit procedures that we need to undertake and obtain. Banks merely obtaining bank statements from the client or from the client's portal is not a sufficient appropriate balance confirmation or audit evidence. So bank balance confirmation has to be obtained, and the date of receipt of bank balance confirmation should also be rightfully before the date of the signing of the balance sheet. So this is one of the very critical audit procedures in terms of bank balance confirmations, which we need to keep in mind while checking cash and bank balances.
The same.
Just to add to what Vineet said, see, definitely he's very right in saying getting a direct confirmation is critical, because at times what happens is if you see the balance online, even if it is through directly logging in front of the client, balance would be right, but when you send the confirmation, you get additional information of any bank guarantee given, if any contingent liability, or at times any other balances which are not reflected in your books. So I think it is very critical that you get a direct confirmation from the bank.
Yes, yes. So now in the present practice, most of the documents are available in the digital form, including bank balance certificates, PDF copy of bank balance certificate, or bank balance certificate statement downloaded in the presence of the auditor from bank side. Can be accepted, all these can be accepted as a valid document?
Yes, definitely. Audit evidence in the electronic form is nowhere written like if it is in the electronic form, then it would be tampered. Electronic form of audit documentation is always acceptable. Plus, unless any other kind of suspicions or doubts have been raised over that particular audit evidence, otherwise electronic there is no harm in keeping all the electronic formats. Even we as auditors, when we are documenting all the audit evidences, we are recording it in the electronic form. There were times when we used to create these audit files and hard copies of all the documents were used to be kept, but then we as auditors also, we are keeping all the entire audit documentation in an electronic form. So audit evidence in the form of electronic form is always acceptable.
If there is a no change in the share capital figure and no change, and should we need to make any inquiry if any reduction or any transaction or right issue or reduction or bonus etc. took place?
See, if there is
the
any
duty of the auditor to take these type of questions if there is no change in the share capital.
No, when we talk about if there is no change in the share capital, the auditor, based on inquiries, based on comparisons, definitely the auditor will have to check still if that there is no transactions existing in the books of accounts. But then when we just go through the board, like during the planning stage itself, when we try to go through the secretarial records and we come across that there was no such rights issue or any fresh issue of new capital was there, and then we see that okay, the share capital is the same, then we get reasonable comfort about it. But then still, if any such kind of a transaction still appears pertaining to share capital within the books, then definitely that raises a red flag in the eyes of the auditor. Okay, then if there is no change in the share capital, then how come that kind of a transaction is appearing? But otherwise, on the basis of comparison, sufficient appropriate audit evidence can be obtained.
So thank you so much, Vineet ji. These were the questions relating to our today's VCM. It was a wonderful deliberation from both the speakers, and 3,839 members are live for today's this VCM. I hope this topic is very up in today's time as well as in the audit time, and we all gained a lot through the deliberation of both of the speakers. And thank you so much for the wonderful deliberation and sparing your valuable time on a very short notice. And during this peak time, during this audit time, Hemel sir, Vinny sir, both of you have here spared your time and enlightened all our members on various intricacies on these two essays on audit evidence. On behalf of WSP of ICI, once again I extend my heartiest thanks towards Vinny ji and Hemel ji. Thank you so much. Thank you so much, Hemel ji. Thank you so much.
Having
Thank
us.
you so much. Thank you. Thank you.